Well, thank you everyone for being here. And I am excited to see what comes of this. I shared with the church council Tuesday night, and we'll be sharing it more widely with the congregation as it becomes reality. We recently received a bequest. So one of these planned giving tools was used, and it is in the low six-figure range. So that will be a wonderful blessing to the church. So thanks be to God. And maybe once people hear that, they will say, yes, sign me up. I'd love to know how we can do that. So I can tell you these sorts of things are real, and they are a real blessing to the church. And with that, let me turn it over to our friends from the ELCA Foundation.
Well, wonderful. Well, thank you so much for inviting us this morning. I'm Pat Hardig, and I am the substitute regional gift planner for your area. I'd like to introduce you to Carl Bierman, who will be your permanent teacher in planned giving. Carl just started with us last week, and he might seem familiar to you. That's because he's come to us from the Northeastern Ohio Synod. And so we're very happy to have him on board at the ELCA Foundation. So what I'd like to do, if I could share my screen, I have a PowerPoint presentation that I'll go through, and sometimes I cannot see the other people once the PowerPoint begins. So if you have any questions or comments during the time, just speak up, because I won't be able to see if someone's going, oh, wait a minute, I have something. So feel free to ask me questions during the presentation, but if you want to wait till after, that's fine too, but you'll have to speak up because I might not be able to see you. So
very good. So just like in Bible study, just go ahead and shout out.
Right.
I've switched you over to, or switched us over to speaker view, so we'll see the slides larger on our setup here.
Okay. All right, so you're just going to have to give me the, you still have not given me the ability to share my screen yet.
Okay, let me see what I can do here. Let me click more. Let's see.
Yeah.
I tell you what.
So click under participants and then see my name there. Yes. And then there should be an option to let me
make you co-host.
Yep, that's how you do it. There we go. Okie dokie.
See, we've all learned something already. I love it.
And that's the wonderful thing about Zoom, is that everybody can just say, hey, try this, try that. And eventually something works.
We hope.
Right. All righty.
Success.
Success. So just hang on one second here. All righty, there we go. So I actually can see everybody, but I'm going to make you smaller so that I can, there we go. Okay. So the first thing I have to tell you is we are indeed part of the ELCA. We are actually a wholly owned subsidiary of the ELCA, the ELCA Foundation. But most important thing I have to tell you is that this presentation is for your general information, and I am not giving you specific legal advice. So the ELCA Foundation has some wonderful gifts to offer to congregations. And what we try to do is we try to help the congregation in general to have a ministry funding plan that will help them move forward in doing their ministry. And we also help with individual members to develop legacy plans for their own gifts. And through that, we try to help members make the best gifts using their best assets for the best beneficiaries. And I'll explain that as I go along. So in this particular presentation, I'm also adding just a little bit of information about estate planning in general and the type of documents that you will need in an estate plan. I'm one of the oddballs in the ELCA Foundation in that I'm not a pastor and I am not a former Thrivent representative. I'm actually an estate planning attorney. So while I'm telling you what everyone should have in their estate plan, I am not giving you personal legal advice. But anyway, the estate planning is really celebrating the journey that you have been on for your entire life. And it's creating those documents that say to your family and friends and the organizations that you care about that they really added value to your life and you want to share your blessings with those people. So estate planning is just about creating the documents that put everything in order so that while your loved ones are grieving, they won't have to stress over what to do with your stuff. So those documents are a will, a power of attorney, a patient advocate form, a ladybird deed. We call it a ladybird deed in Michigan. Oh, by the way, I'm from Michigan, just south of Detroit. And so we call it a ladybird deed in Michigan, but in Indiana, you actually call it a transfer on death deed. And it's a very simple form, and we'll talk about that later. You might also want to have a trust. They're not always necessary. And one of the most important things to do to avoid probate is to make sure you have beneficiary designations on accounts. So I just want to point out this picture. I actually took this photo. I mentioned that I live south of Detroit. This is a 200-acre woods on the island that I live on. I live on an island that is right where the Detroit River opens up into Lake Erie. It's called Grosse Ile, and it's just south of Detroit, so you would never realize that there was all this lush wonderfulness in the Motor City area. I'm literally 20 minutes from downtown Detroit. So I wanted to share just share a little bit of beauty of where I live, and I'm going to be showing off pictures because we just moved here last September. We lived in our family home with our 3 daughters for the last 30 years. When we finally got rid of all 3 kids, oh no, I don't mean get rid of. I mean when they finally moved away and got married and did whatever they were doing, my husband and I, my husband's a Great Lakes scientist, so we said, okay, now it's time for us to have our little dream home on the water. So we moved. And this photo is actually a wintertime sunrise photo out my bedroom window. Wow. So, isn't that awesome? So you are actually looking across to Canada, and Lake Erie would be to the right. See, we. So anyway, other than the photo, so let's talk a little bit about those documents. So what's in a will? A will is just a document that lists your beneficiaries, both people and organizations, and you explain what you want them to receive. You have to name your personal representative. They also call that an executor, so that that person can make sure that the people and the beneficiaries receive the things you want. If you have minor children, when you create your will, you would also list a guardian. And your will would also create a testamentary trust if you had still minor children. So really, a will is a pretty simple document. The other document that's really important to have is a power of attorney. Now, a will is a document that goes into effect after you pass away, but the power of attorney is a document that you use while you're still alive, and it lets persons handle your affairs for you. If you are sick or you're out of town or for some reason you would just like someone else to to be able to go to the bank or talk to Social Security or do anything that you would like them to do. So that person is called your agent, and you give them the power of attorney to act on your behalf. Does anybody know what this photo is?
That's the Renaissance Center.
In downtown Detroit, correct.
We were just there last summer, and we'll be back in your neighborhood July 28th through 31st.
Fabulous, fabulous. So, but do you know what this photo is?
Some people working at a car factory.
It is the famous Diego Rivera giant mural in the Detroit Institute of Arts in the DIA. So if you get over there, check this out. So anyway, what are the other documents that you need is a patient advocate form. And this gives authority to another person to make medical decisions on your behalf if you are unable to make them for yourself. This document is super important because I can't tell you how many people have contacted me after their mother already has dementia, and the mother's in the skilled nursing, and they really do not want resuscitation or to, keep continuing to keep this person alive after they, really no longer should be. However, healthcare professionals are really required to give medical assistance and keep someone going as long as they can. So if you have a patient advocate form and it specifically indicates that this person can, because you have an advance directive within the patient advocate form, this person can say, no, we have a DNR, a do not resuscitate, and we would like this person to go when God is calling them. So it's really important to have the patient advocate form. So then the Ladybird deed. So this photo is actually the photo of our little house that we bought. That's the front of the house, and the other side of the house is where the river and the lake is. The Ladybird deed, or the transfer on death deed, avoids probate by allowing you to deed your home to yourself for your lifetime. That's called a life estate. But it will also pass it on to your children after you pass away. Now, the cool thing about it is the child does not become the co-owner during your lifetime. So it's not like when someone says, hey, I'm going to get a quitclaim deed and add my kid to it so that if something happens to me, they get the house automatically. That would happen. However, while you're alive, your child is the co-owner of your home. So if you want to sell your house, you have to get your child to sign off on it. If your child has gambling debts, they can come after your house if something crazy happens. So the Ladybird deed, or the transfer on death deed, is the way to solve that problem, because you have complete control of your home during your life, but it will pass to your child when you pass away. And all they have to do then is, if they're going to sell your home, they just have to attach a copy of the death certificate to the new deed, selling it to the new person, and everything is fine. There's no probate involved.
So what is the difference between that and in my will or trust saying, upon death, my house goes to blank?
Well, if it's in your will, it would have to go through probate court, because your executor or your personal representative would have to receive letters of authority from the probate court in order to sign the house over to someone else.
Okay.
So the Ladybird deed, or the transfer on death deed, completely avoids that. Now, if you have it in your trust, that's a different story. If you do have a trust, your trustee has the authority to sell your home. But this is in a situation where there's no trust involved, and it's really helpful on moving these things forward. And then I also mentioned in here at the bottom, beneficiary designations. This is also another way to avoid probate court, because if on your bank accounts, your brokerage accounts, your IRAs, if you have a beneficiary designation, that also will avoid probate. So when you pass, the person only has to go to the bank with a copy of the death certificate, and they have access to your account. Now, this is not the same as making your child a co-owner of your account, because if they're a co-owner, you have the same issue with they can go in and take your money while you're alive, or a creditor could have access to it. So basically, you ask your bank to list your child as a beneficiary, or sometimes what they will do is they will put your child's name on there, and then after their name, it will say TOD, transfer on death, or POD, payable on death. So those are, again, things that prevent probate and make it very simple, or at least simpler, on your heirs after you pass. So then what about a trust? In the old days, when I first started doing this, so I've been licensed for, I hate to say it, I've been licensed for 40 years as a licensed attorney. And 40 years ago, people had to pay estate taxes on an estate of about $600,000, which, if you owned a house and if you had life insurance proceeds, if you had some other things, that was pretty easy to get to 600,000. Well, now it's 23 million. And that is combined, as a husband and wife, 23 million, 11 and a half for an individual. So I have yet to meet a single person who needed to pay estate taxes. And one of the reasons that they used to set up a trust was so that people didn't have to pay estate tax, because they had a way of dividing the money up, and there was all kinds of fancy things that they could do. So now, when that isn't really the reason for it, what would be some good reasons to have a trust? Well, if you had a special needs child, you would want to set up a special needs trust, because that allows them to still inherit money from you, but that money would not count toward their Medicaid, their ability to continue to have Medicaid, because as you know, medical expenses are, expensive. Another reason to have a trust would be if you had children from a previous marriage. So if you had a new spouse who most of the time the spouse would receive all of the proceeds from an estate. If you had children from a previous marriage, you would want to make sure that they would also be receiving part of your estate. So you would set up a trust in that regard. And then also, if you had a surviving spouse that really needed an extra safety net. So if they were not good with money, or if they also had some health issues or something, you might want to have a trustee that could help them move forward. So I've got a website there. And this is with an actual online company that prepares trusts and wills. And you might know Mike Ward, who's done a lot of the Stewardship for All Seasons programming. His company has partnered with GenTrio. And so if you go to this website, gsb.gentrio.com/join, you could get a discount on getting these documents prepared. And it's very reasonably priced. And so you don't necessarily have to go to an attorney to have all of this done, but you could work through them. You certainly could go to attorney, because attorneys need need stuff too. But this is one resource that we can share with you.
If you do need a name of an attorney, we do have our list that we put together in the fall. We did a series this fall on end of life issues and touched on a lot of these things. And I just asked if people have used an attorney that they're happy with to give me that contact info. So we have a list of names we can get you started with if you do need to consult an attorney as well.
Absolutely. And I always suggest to people that they do talk with an attorney, especially if they have special situations in their lives. That it's always a good thing to do. So that was just some general estate planning conversations about documents that you would need. But then let's talk about what the ELCA Foundation actually does to help congregations and individuals. So I like to describe the three services that we provide. And the first one is, we call it a ministry funding plan, but basically it's helping you be prepared to receive charitable gifts as a congregation. Now, I know that you worked with our predecessor, Chris Burnett, in setting up your gift policy. And
Yes.
so that's awesome. And you might want eventually to have Carl just take a look at that again, because we have done some updatings to our proposed gift policy, our sample gift policy. And Carl might have some suggestions to tweak yours, or you may just want to leave it exactly the way it is. But anyway, just know that that's a resource for you. So really, your congregation is halfway through this process. And as you know, what the ministry funding plan does, it's two documents, the gift policy and the endowment bylaws that I'll talk about in a second here. But it really helps to build structure and confidence so that your members know that if they leave you a gift, that you will use it wisely. So, and again, this is really based on a common occurrence that is 100% guaranteed to happen to every individual in our congregation. So the gift policy is the first thing that we talk about. And what the gift policy does is it helps a congregation member know, how can I provide a gift to my congregation, and how will my congregation use that gift? It's going to reduce any issues you might have amongst your members, the council, how should we use it? It promotes leaving an estate gift, and the members are more likely to leave a gift if they know how you will use it. I actually have a personal story in this. My mother-in-law passed away almost 20 years ago now, and she left her congregation $10,000. And when I started here about 3 years ago, I asked that church if they had an endowment. And they said to me, well, we have the $10,000 that your mother-in-law left us in our bank account. So for 20 years, they had the money sitting in a bank account. No one knew what to do with the money, and yet they didn't invest it either. So, obviously that was not a good use of that gift. So with your gift policy, you're going to know exactly what to do with the money when someone leaves you an unrestricted gift, the way my mother-in-law did. So the other part of the ministry funding plan are endowment bylaws. And the endowment bylaws or endowment policy describes how your congregation will define your ministry, and it outlines the overall management of the fund that you create. So really, planned gifts are part of a balanced stewardship program. Your major gifts are something that you may have if you're going to do a capital campaign or some special project where you're trying to raise money for. Your current gifts are your operational fund gifts from the weekly plate offering. But those planned gifts are things that we generally don't think about or try to promote, but those really are gifts that will provide you with long-term sustainability in your congregation. It doesn't cost you anything to prepare initially. There's no money that comes out of pocket when you're preparing your legacy gift. And it certainly is based on a common occurrence that is 100% guaranteed to happen to all of us. So saying it's 100% guaranteed, how many funerals were held in your church in the last 12 months? And certainly during COVID, I know we had more in the Detroit area. Now this number is pre-COVID numbers, but 26 ELCA Lutherans pass away every day, and probably our most generous givers. And yet they might have given their entire lives and yet didn't leave anything to the congregation when they passed. And it's only because we didn't ask them. So it's really important that we ask them. And that's the beauty of having a gift planner, is the gift planner does that asking and works with an individual to set up their legacy plan. So, the ministry funding plan is the first service that we provide, or one of the services we provide. The second service is the opportunity to invest those funds. Like you said, you just received a six-figure gift, to be able to invest that into the ELCA Endowment Fund Pooled Trust Fund A. Now, this was set up when the ELCA was formed. You probably remember, or you don't, but you know the story about how the LCA and the ALC came together. They pooled their money. And at that time, they had $45 million. And they then created this fund and invited congregations, campus ministries, camping ministries, social service agencies, all affiliated with the ELCA, to also invest their money. So I'm happy to tell you that it started out at 45 million. We are now at $1 billion. These numbers are from the end of the year, but we have $1 billion under management of all ELCA affiliated funds. There's 938 congregations, 54 synods, and 163 other entities, meaning like those campus ministries, social service agencies, universities, and they all have their money invested with Fund A. So Fund A is set up to have a board of trustees and administrators and investment managers and all of that good stuff. But the important part is where it says client servicing and regional gift planner. That's what makes it helpful and useful to you, is that if you have any questions or anything about your account, you can contact your regional gift planner, who knows you and will be able to help and guide and navigate you through that, through your account. The other important thing is that we do social purpose investing with the money. So we try to use the ELCA social statements and policies as a guide for investing, so that your money is not only growing to help you do ministry, but we're actually using your money to move society forward. So we screen out for harmful things that we don't want to invest in, and we screen for good things, social things that will help us have a better society. So we look to invest in sustainable forestry and renewable energy. We look for things like things that support education and job training and affordable housing and public health. So we're really doing good with your money while we're also making money for you. I want to throw this out there right now. Carl and I are salaried staff person. We do not make a commission if you choose to put your money with Fund A or not. It doesn't matter to us, but it has been a wonderful investment for all of the congregations and entities that have been part of Fund A. So this chart just shows the growth of $100. So if you had put $100 in 10 years ago, it would have more than doubled. My daughter's a Thrivent rep, and she tells me that the sign of good investment is if your money doubles in 10 years. So I have to believe her that's a good thing. And the fees are inclusive totally for 1.06% per year. 60 basis points is toward administration, and 46 is the investment management services. So those are the total fees. There are no other fees involved in the fund day accounts. And of course, you have to put in another disclosure statement because we're talking about money. And so, you know, you can do a real fast reading of that, but just know that we do, even though as a church-based entity, we're not required to abide by federal security laws, which is weird. We actually do abide by the Philanthropy Protection Act, and we do everything that we can to make sure that your investment is good for you and for the larger church. So I said we provide 3 services. Oh, did someone have a question?
The question was for me.
Oh, okay. And then, so I said we provide 3 services, and the last one is that gift planning opportunity for individual members. So, stewardship and legacy are the, you know, important things that our individual members care about. They're good stewards during their lifetime, and legacy is what they leave to church after they pass. So most of our members, the most important things to them are their family and their church. And we know that church is important to them because they come to us. They're our family, right? Or they're our members. So, but we have our expectations of what we will leave to family and church. And then there's the reality if we don't plan properly. So you might have heard of Pinterest. This is just a little craft on Pinterest that I saw. You can see it's crayons that you melt and it makes this rainbow. I have 3 little granddaughters and they love crayons, and so they love rainbows. And I said, so let's try this. Okay, it looks simple. We should be able to figure this out. So I decided that I would try it. And of course, you know, my expectation was that beautiful rainbow, but the reality was this, because I did not plan properly. You know, I kind of rushed through it. Thankfully, I had duct tape. But, you know, it's important that you do planning if you want your reality to meet your expectation. This was another thing that I saw on Pinterest. I absolutely love chocolate. And when I found out that I could make a brownie in a mug in 2 minutes in the microwave, I was all about that. So this was my expectation of a beautiful brownie to eat. But then when I made it, you know, my reality was explosion. And so obviously I did not plan that properly. And this is kind of how it turned out. Not a good thing. You know, I also saw this cute baby in a pumpkin, right? So I said I have 3 little granddaughters, you know, so the littlest one, we said, oh, let's try this last Halloween. Well, you know, it didn't work out right. I mean, there's even a little pumpkin seed on that poor baby's knee, you know. So the point of all these silly little things is that, you know, you really have to have if you have an expectation of something, you have to plan in order to make that reality meet your expectation. So if we have an expectation that our family in ministry will receive all the things that we want from our estate, we have to plan that properly, because the reality could be that we're wasting money, we're wasting time, and, you know, the things that we want them to have are missing from, you know, where we want it to go as quickly as we want it to go. So why is it important to have a gift plan? Because with a gift plan, you could potentially save on taxes and be an eternal steward. So your gift plan is going to show you the best ways to give using the best assets for the best beneficiaries. So this would be sort of an example of what a illustration of a gift plan would look like. So in this situation, this family has a total estate of $795,000, and they're going to leave 85% of it to their family and give 15% to charity when they pass. So you can see, can you imagine how wonderful they felt when they realized that they could leave almost $120,000 to charity? That's just so wonderful and amazing. So we sit down with an individual or a couple, and we look at all of their assets, and we figure out which ones are the best assets to leave to charity and which ones are the best to leave to their family. Because in this situation, you'll see in the middle there where it says split and then traditional IRA 400,000. They're going to take part of that IRA and move that over to the charity side and give the rest of the IRA to their family. And does anyone know why we would pick on that IRA in particular to give to charity?
Because with a regular IRA, you pay taxes when you take the money out.
Correct. And so when you're dead and your family takes the money out, they pay taxes on it. So that means they're adding that amount of money to the income they already have, and they're paying tax on it. So if you take that money and give that to charity, the charity will receive the full value of your money and they don't have to pay tax on it. And in this situation, what they are going to do with their assets to charity, they're going to give 50% of it to their home church, 25% of it to another ELCA ministry, probably World Hunger, and then the other 25% to another charity, which could be the Humane Society or the Sierra Club or anything that is important to you. So we help you figure that out, get everything situated so that we know exactly and you know exactly where that money is going to go. And how we do this is through a document called a distribution agreement. So if you say to us, ELCA Foundation, I'm going to leave all this money to charity to you, and then I want you to give it to my church, World Hunger, the Sierra Club, or Humane Society. And we'll say, okay, we can handle that. What this does is, as you know, with any estate plan, it's your money until the day you die. So you can change your mind. If Pastor Eric really gets on your nerves and you're like, no, I am not leaving any money to that church, all you have to do is call Carl and say, Carl, I'm going to change my distribution agreement. I'm going to leave, I'm going to leave all this money to World Hunger and to the Sierra Club, but not to, where that Pastor Eric is at. I'm just joking, of course, but
and Carl will hang up on you at that point.
Yeah. but what this does is, instead of you having to change your will or change your beneficiary designation on your IRA is going to say the beneficiary is the ELCA Foundation. And then the agreement that you have with us says we will take that money and give it to all these places that you want us to give. So so you can change your mind as often as you want with us, but you don't have to change those other, legal documents. You'll be changing the document that we have. So it's really a wonderful service that we provide. Some of the other giving vehicles and options that we might discuss in a meeting when we're talking to a member or a member and their spouse are ways that they can give. So even though I'm from Detroit and the word vehicle is in here. We don't really mean giving cars. But for some reason, when people started doing gift planning, they used the word vehicle. And so anyway, so of course, you know, the gifts can be made through wills and trusts and things like that. But there's also gifts that you can give today while you're alive and receive an income during your entire life. So for example, a charitable gift annuity or a charitable remainder trust is where you give a minimum of $10,000 to the ELCA. We invest that money, and while you're alive, we pay you an income from that. When you pass, what's ever left in that account will go to whoever the beneficiary is that you choose, the charitable beneficiary. So again, it could be your church, it could be World Hunger, it could be, you know, a Lutheran university, wherever you wanted that to go. Another way to give is a donor advised fund. And this is where you would give a sum of money to the ELCA. They invest the money, and then every year you choose a charity that will benefit from it. So this is a great way to have families create their own philanthropic philosophy for their life and for their children going forward. A named endowment is another way that you can give money while you are alive or after you pass. So you would give a sum of money to the ELCA Foundation. You could call it the John Smith Memorial Fund or whatever name you would like to give toward it. And then the interest income that is earned would go to, again, the charity of your choice, meaning your church or wherever. Then, of course, there's also gifts of cash and security and real estate. These type of gifts, particularly the security and real estate, can potentially save you from capital gains tax. You can give a qualified charitable distribution from your IRA, naming your congregation as the beneficiary of that distribution. So if anyone has an IRA and they have to take required minimum distributions, this happens after you turn 70 and a half. They had during COVID, they had a 2-year reprieve that you didn't have to do it until you were 70, where you had to take out those required minimum distributions, but you could still, at age 70, use a qualified charitable distribution. So what that means is, instead of you taking the money out and putting it in your bank account and having to pay tax on it, if you had that money go directly to your church as your offering, you never have to pay tax on that money, and your congregation receives the full value of those dollars. So I always encourage everyone, if they are required to take minimum distributions from an IRA and they're giving money to church, that they should just give the money directly from their IRA so they don't pay tax on it, and everybody wins. So we've got some really good flyers on that on the ELCA Foundation website that that you could print out, Pastor Eric, and leave at your church, or you could email them to people so they make sure that they're doing that. And then, of course, you know, life insurance is always a wonderful way to give a gift, as you can name your church as a beneficiary. There's several different ways to do life insurance. We had a gentleman who purchased a life insurance policy, made the ELCA Foundation the owner of the policy, but every year he paid the premium. And by doing that, he was able to take a charitable deduction for the cost of the premium, because that was a gift to the church, to the ELCA. So, you know, that's another way that you can leave a really large sum, whatever the death benefit would be, and the cost is merely whatever your premium amount is, that you're actually getting a charitable deduction from. So it's kind of a cool way of moving forward. So anyway, it's really important to do a gift plan. We provide step-by-step instructions as to what you do after you meet with us, how you put that plan into effect. And it really helps you gain, confidence that you're going to be doing the right thing for everyone after you pass, because we want your expectation to meet your reality. So that is it. I will stop sharing. Okay. Does anyone have any questions?
I wanted to make a comment
Sure.
just briefly. I thought it was fascinating with the kind of sample gift plan that you showed us that somebody put together, that even with their congregation getting, they said there's going to be one slice going to charitable giving, and of that slice, our congregation is getting a slice of that.
Right.
And that was still $60,000.
Correct.
Now for us, that would be roughly, that'll be somewhere in the neighborhood of like 15 to 20% of our budget for a year.
Absolutely.
And that is a little sliver of one piece of the pie. So that idea that, even a small piece of an estate can make a big impact in a congregation, I think is pretty fantastic.
Right. And then their kids still got a boatload of money too, because, it was still 85% of their estate was still left to the children, and all three kids got a lot of money. So it really, and you have to remember, ELCA Lutherans, for the most part, live a really long time. And especially if they buy a charitable gift annuity, because remember, they're going to get paid every year of their life, they tend to live to be about 100. So we tell people, if you want to live a long time, God is going to thank you by, no, I'm really just joking right now, but it is true that they do tend to live in 90s and 100. But so if you think about it, when that person passes, their kids are going to be in their 60s, right? And they're like, we don't want your money, So anyway, it really, no one wants to think about when they pass, and but it's inevitable that we all will. But what I like to remind people is, you just don't want to make it difficult on your kids when you go, because we've all had a situation where, Aunt Mary dies. She didn't have a will. She didn't have a plan. Now we have to schlep over to her house and go through all her junk and figure out what her accounts were. If you just have all that planned while your family's grieving, all they have to do is look at those documents. Oh, this is where the bank account is. We're listed as the beneficiary. This is where this is at. So it's just so simple for them.
Yeah. And I think, I don't know what they refer to this as on the East Coast or the West Coast, but in the Midwest, I've heard it referred to as Seagull Syndrome, where cousin so-and-so flies in from the coast who hasn't seen the family member in 20 years and suddenly starts saying, well, you know what we ought to do is this.
Yeah.
So this short circuits any of that as well.
Exactly, because you decide where you want your stuff to go. Right. So, so going forward, Carl will be available to help you with those gift plans. And, we're hoping that we'll be able to do everything in person going forward, and that'll be really nice too. And we have lots of resources to help people, figure a lot of this stuff out.
Fantastic. Folks who are gathered here, questions? And like I said, we can turn off the recording if people have questions that they don't want asked or answered where other people might be able to see them. If we have those, I'll stop the recording momentarily here. But do you have questions that you would be comfortable putting on the public record, so to speak?
I think it was a wonderful presentation, very, very informative. And I'm already having the RMD take out my yearly
Wonderful.
donation, but it's good to know what else is available to us. Thank you very much.
Well, thank you. And of course, you'll have Carl's contact information, his email and his phone number. And if any of you come up with a question, you know, like tonight at midnight, you're like, oh, here's my idea. Just call Carl.
Just go.
And
Oh, yeah, they'll love that.
no, it takes a while for some of this stuff to, you know, kind of sink in. And then you say, yes, I would like to talk with someone. And the way that it works out usually pretty well for us is that if you have, you know, a handful of people who would like to do a gift plan, Carl could come to your congregation on a Sunday afternoon and set up appointments so that people can meet with him at the church. He also is available to go to someone's home. Sometimes people are more comfortable, you know, in their home talking about these confidential things. Everything that you tell us is completely confidential. We do not share any of your you know, your financial information or who you want to give your money to. We don't share that with any beneficiaries unless you want us to. You know, like if you want us to say, please tell Wittenberg University that they're in my estate, you know. So.
Fantastic.
And really, the Zoom is not bad. This was very nice, and it was good for you. You didn't have to spend that time to
Right.
so it works.
Yeah, and I think going forward that we as a church have learned a lot by doing all of this. And I'll tell you, I'm much more productive. And I've done many legacy presentations this way. I've even met with individual people doing their gift plans this way, and because I, you know, send them the documents by email and we go back and forth. And so, yeah, it really is a good stewardship of the church's money too, because they're not paying for our travel, you know, to go places. So, yeah.
Great. Well, yeah, this is all excellent information, and yeah, I think definitely will benefit the folks who have been here, and we'll have a brief recap of this for our monthly newsletter that will go in the June newsletter. Jan is furiously taking notes over there, and I did record it. And you know, we'll make this presentation available for people at the congregation as well. So
Wonderful.
Excellent information, and thank you for being with us today.
Well, thank you so much.
And I look forward to working with all of you.
Absolutely. Absolutely. We will be in touch.
And actually, Pastor Eric, even though I was your substitute teacher, I'm actually retiring on June 1st. So I'm going to be.
Congratulations.
Wow.
Totally. Yeah. Yeah.
Enjoy.
Thank you. I have our third daughter's getting married. So I have a wedding to plan, and, you know, and our beautiful new home to enjoy on the waterfront. So, so thank you. All right, everyone. We'll have a lovely day.
Thank you. You as well. Take care.
Bye-bye now.
God bless.
Bye.